This gets in high interest now. Just making headlines around the world. Billionaire Ken Griffin firing back at New York City Mayor Zohar Mamdani.
Thanks, Naomi. Yes. Makers and market movers. This is The Pulse with Francine Lacqua. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in Oslo, where the Norwegian Sovereign Wealth Fund is hosting its investment conference. We're excited to be here, and these are your top stories. President Trump convened his national security team to discuss Iran's proposal to end the war, but the White House says it maintains red lines on any deal. The Bank of Japan left its benchmark rate unchanged in a split vote that actually increased the likelihood of a hike in June. And OpenAI reportedly fails to meet its targets for new users and sales, fueling concern that it may struggle to support its huge spending on data centers and chips. Now, live from Oslo this hour, our guests include Nicolai Tangen, the Chief Executive of the Sovereign Wealth Fund of Norway, and Stefano Domenicali, the Chief Executive and President of Formula One. Again, a lot going on in the markets, so let's start there. I know we have a lot of central banks. It's not only the Fed, it's the ECB, and of course the Bank of England. Overall, I'm looking at technology stocks. I can do that using the Bloomberg terminal on the move. Look, technology stocks seem to be leading global equity of investment in artificial intelligence will pay off. Surfaced oil kept on rising again as the Strait of Hormuz keeps on remaining shut. Euro area March 1st to actually for March 1st year CPI expectations again rising to 4%. That's higher than the estimate of 2.8%. So, as I was saying, we're here at the annual conference for Norway's Sovereign Wealth Fund, which owns some 1.5%. Listen to this, of all listed global equities. Now, the fund did lose 1.9% in the first quarter of this year, pointing to AI disruption, but also private credit concerns and the Iran war. It still beat its benchmark by 1 basis point, and the results didn't capture the market upturn after the first ceasefire in the Middle East on April 7th. So there's a lot to discuss with, of course, the world's largest sovereign investor. We'll talk about positioning and volatility coming up with Nicolai Tangen, Chief Executive of Norges Bank Investment Management. Nicolai, as always, thank you so much for joining us.
Thank you.
I mean, the markets, it's different or difficult to understand exactly how they're positioned, because if you look at traders in fixed income, it's different to equities. Where do you see the biggest market dislocation?
Well, the strange thing is that we, in my mind, haven't got a very big location, because if you had told me, laid out the events, I would have thought the market should be down a lot. And indeed, it's actually up on the year. I think that's quite surprising.
Yeah, it's up, it's down. I mean, does this angst not come to fruition? I mean, we look at inflation, even the latest figures from Europe. Inflation could be a worry, and yet actually equities choose not to see that.
Yeah, no, I think it's remarkable, because based on what's going on in the Middle East, you would expect this to feed through, higher energy prices, higher food prices, fertilizer prices, and so on. It is, to a certain extent, starting to hit Asia. We should expect it to hit Europe and the US through higher prices, and typically that is bad for the markets. But the market is really taking it in stride.
Worry about inflation expectations, and the fact that there could be some kind of policy mistake from central banks?
Yeah, inflation is what typically gets the markets, and so that's something we really have to watch. On the other side, we have artificial intelligence and what we think inflationary effect, and I think that is what the market is kind of penciling in just now.
Do you have question marks about artificial intelligence? Again, there's so much capex going on there that as soon as there's a little bit of a wobble, like you saw,
fine rotation here back from
lots of capital going in there. Now we are basing our view on how we are using it ourselves and the effect that we are seeing on our business. We think we have taken out nearly 20% productivity gain just over the last year. We are using it to help us reduce trading costs. So it's a huge benefit for us. We are putting it in everywhere we can.
Session
now, whether that's now more than reflected in share prices of these companies, I think is very, very difficult to say. If it's a bubble, I think it's a big shift.
The difference.
The bubble is fine as long as, until the point it bursts.
Well, That's true, but it's also putting in a lot of capital into infrastructure projects, data centers, and so on, and building capacity that we do need to implement AI in society.
I mean, you said on a massive fund, right? It's 2.2 trillion. Is that an asset or sometimes a disadvantage?
No, I would say what's well. First of all, that amount of money is for sure an asset. When a fund is that big, you need to just think a bit differently about how it's positioned, and you need to have a very strict mandate. And we have a very good one from the Ministry of Finance, which basically explains to us how we should be invested. Pretty accurate guidelines for what we should be doing. And I actually think in this environment, it's easier to invest in the market, to be part of the market, than actually picking individual companies and sectors.
But do you sometimes feel, I mean, you can't really move as quickly? And again, is that a good thing or a bad thing?
Well,
it's something so big like the Middle East.
So it depends. Sometimes it's good to be able to move. Sometimes it's good not to be able to move. And if you look at the volatility we've had so far this year, well, I mean, the fund is up several percentage points this year. I think if you had been able to move as much as you wanted to, perhaps you would have made some stupid decisions.
I mean, does that go to, I guess investors' anxiousness that people maybe sometimes move too quickly? I don't know. How do you perceive risk and risk-taking in markets?
Normally people move too much. There is something called an inertia analysis, and that means that you basically look at your results, what they would have been like if you just kept your portfolio from the beginning of the year and not done anything. And then you look at your actual results. Very many people subtract performance by moving things around too much. So,
Like
especially in volatile periods,
gotta be back.
and also
Closed.
it's not. I would say it's kind of medium volatile. It moves on policy decisions. It moves on geopolitics. It moves on uncertainty. It moves on wars. It moves on energy prices. It moves a lot, basically.
Do you have to take a view on what happens in the Middle East? Because again, it's very difficult, and a lot of the market positioning was towards something optimistic. Where actually, if you look at the geopolitics, there was no real, end in sight, or even a way to go down a notch.
Yeah, it's a very complex situation we have in the Middle East now, and I think the outcome there is very uncertain.
Nikolai, talk to me a little bit about this idea that AI is disinflationary.
Well, we are seeing the productivity gains from this. You can do things with fewer people. You can automate more things. I think there are a lot of jobs which are going to disappear. Do we need as many lawyers going forward? Probably not. Do we need as many accountants? Probably not. Do we need as many consultants? Probably not. Now, is that going to make the world a worse place or a better place? Perhaps even a better place. And I think also we can stop doing things which are repetitive, which are boring, and we can just spend more time thinking.
But does that show up at what point does it actually show in the inflation numbers? Because we're just at the cusp on maybe in certain points in inflation seeing it, but it's not widespread enough.
It's not. No, it's not widespread because we have the offsetting effect, which is from the energy market on the back of what's going on in the Middle East. So we have these two intersections and two effects coming together.
I mean, is that why it's hard? It's because you actually had two opposing things, and central banks also have to make a decision on that.
Yeah.
So again, as an investor, how do these two tensions play out?
Well, the way we deal with it as an investor is to be broadly diversified and very long-term in our thinking. And I think that's a pretty good place to be just now.
What's your take on private markets?
On the private market, so we are actually not in the private market.
And that's in the statute. I mean, you can't, right?
We cannot be in the private market, but we do observe the private market. We look at it. We are seeing some signs of worry there, some early signs of stress. I think if rates went up a lot and we had an economic downturn, that probably would crystallize more of it. But I think it remains to be seen.
Is there a worry that something systemic? Is there something in the private markets that makes you worry about your investments?
We don't have any reason to believe that there's anything systemic, but for sure there could be losses that people had not expected.
Such as?
We'll see when rates go up. If rates go up and we have an economic downturn, that's typically when you see whether people have the right types of credit.
So what's the next 4 to 5 months that are particularly crucial if the price of oil stays at this level?
Well, I don't know when we eventually will see these type of effects, but when they happen, we for sure will see who's written good credit.
How do you see ESG going forward?
Well, we think it's important that companies continue to be sustainable in the way they do business, and the reason why we argue that is because it makes sense from a financial standpoint. You know, if you don't have a sustainable business, it's going to be a bad investment. If you don't have a sustainable business, you're not going to get people working there. You're not going to get bank loans, insurance, or anything like that. So we are consistent in our view, but we always make sure that it boils down to financial considerations. It's important because those type of risks are financial of nature.
Where do you think we are worldwide on this? Does the energy crisis in the Middle East make it more likely that there's more investment and money being poured into ESG as we find other sources, or is that actually just securing the old way of finding energy?
Well, I think we are seeing it in several different ways. One, of course, would be a continuation of fossil fuel and exploration. We are seeing some reversion back to coal. We are seeing an acceleration potentially in nuclear, but we are also seeing a rally in renewable infrastructure, which is a very positive development. And we think some of the investments in that field look really interesting.
Anything on real estate that you worry about or actually you're excited about?
Well, we have big real estate investments around the world. We have nearly 1,000 properties. The real estate market has been not great over the last few years, starting with COVID, banking issues, rates, and so on. We think it looks more attractive now than in the past.